JP Morgan are saying that the chances of an economic crash have increased substantially over the last few months to 35%. Here we go again, folks. In the past 100 years, we've had 5 massive financial crises that have led to massive unemployment, substantial GDP losses, and long-term changes to economic policies and regulation. From the Great Depression all the way to COVID-19, we've seen the economy collapse and rise again and again, more times than Anthony Joshua in his latest fight. But we've not managed to crack the code to stop this happening, or have we? But the world powers are too blind to see it. My name is Ibrahim Khan. Every month I help 4 million plus Muslims with their finances and investments. I have been lucky to get a degree from Oxford in PPE, as well as studying Islamic law and specializing in Islamic finance. And today I'm going to share with you what everyone misses out about the modern monetary system. And then I'll outline the key aspects of the Islamic economic system, which could offer us all a genuine, fairer way to structure our economies. And this is not just about finance, folks. It's about how economics, politics, and philosophy all jumble together and help shape the very world we inhabit. Let's dive in. Folks, the modern monetary and banking system is a massive magic trick that we all willingly buy into every single day. In most Western economies, the monetary system is based on fiat money, currency that is not backed by any physical commodity like gold or silver. The value of this money is purely based on trust in the government and the central banks that issue it. In the olden days, money was tied to gold and silver coins, and therefore there was a limited amount in supply, and so the value of what we call purchasing power of that money was relatively stable. But that's not the case anymore. You see, the vast majority of money in circulation today, about 97% in the UK, and similarly high figures in the USA, are created not by governments or central banks, but by private banks when they issue loans. So folks, what happened when we decoupled money from gold and silver is that we put the power to create money effectively into the hands of those who control our payment infrastructure, i.e. the banks. So when you take out a loan, whether for a house or a car or education, the bank doesn't loan out money it holds in its vaults in the classic sense of things. Like you think that it's like going to Gringotts and there's a goblin that goes downstairs and he gets the gold out and he gives it to you. That's not what's happening, folks. Instead, what's happening is the bank is a digital era now. It's creating new money by crediting your account with the amount of the loan and thus expanding the money supply. Let's say you get out a large loan. You don't necessarily draw out all of that cash all at once. 99.9% of people, when they have these large transactions, they will be wiring it from one bank account to another. Digital money on one side into digital money on the other side. You don't take out £300,000 in cash and give it to the person that you're buying your house off, do you? Lord Josiah Stamp, the former director of the Bank of England, said it quite clearly. He said, "Modern banking manufactures money out of nothing. The process is perhaps the most astounding piece of sleight of hand that was ever invented." But here's where the system reveals its flaws. This newly created money isn't free, folks. It comes with interest. The borrower must repay not only the amount that they borrowed, but also the interest charged by the bank. As more loans are issued, more debt is created in the system, and the cycle just continues. This growing pool of debt is the lifeblood of the modern economy, but it creates a dangerous dependency, as well as increasing the inflation as the value of currency goes down, as more of it is entered into circulation. And this means that things get more expensive over time. Think about it. 20p Freddos are now £1. How crazy is that? There is no longer enough money in the entire system to pay off all of the debts that are due. Just think about that for a second. So we are going to be forced to continue to issue more debt to keep the merry-go-round going. And if the fun is going to stop, then things are going to crash. So we need to issue more debt. So the only way that we are going to survive is by suckling at the teat of the modern banking system. Over time, the system has become reliant on constant borrowing. People, businesses, and even governments must now borrow more and more to pay off existing debts, creating a vicious cycle. And when this cycle falters, such as in the financial crisis, those at the bottom suffer the most, whilst the wealthy often find ways to escape unscathed. The 2008 financial crisis is a clear example. Excessive lending and speculation created a housing bubble that, when it burst, wiped out trillions of dollars of wealth globally. Millions of people lost their homes, their jobs and savings. But what happened to the banks that caused the crash? Many of them were bailed out by governments. And according to the Special Inspector General for the Troubled Asset Relief Program, the US government spent over $475 billion rescuing the financial sector during that crisis, whilst ordinary people faced foreclosure and bankruptcy. So you know the FSCS protection and the FDIC protection in the USA that you get with banks across these countries? It all feels very nice. But what's that all about really? These kind of protections make us all put our money into banks and trust them more. And then banks do things with that money which makes them even more money. But what if a bank messes up and goes bust and it takes too much risk on? It's the taxpayer, i.e. us, who funded their profiteering in the first place because we put the money in there for them to use. We are the ones who then also have to pick up the tab for their near collapse too, all because they are too systemically important to be allowed to fail. As an aside, folks, as a matter of policy, I actually think that this FSCS, FDIC stuff can mask the reality of the risk in a bank. And, ultra high net worths that have far more money than any of these protections, the way they due diligence a bank isn't, it's got FSCS protection, because that's not relevant for them if they've got millions of pounds. They actually look at the credit worthiness of that bank. What is that bank actually up to? Is it safe? Is it credit worthy? Because you're lending money to that bank. It needs to be good enough to then pay you that money back when you ask for it. So that's the thing that they're focused on in terms of their due diligence. And because 99.9% of us, this is not relevant for us because we don't have that much money, we just bank on the FSCS protection, and that just makes banks a lot more chilled out. There's not as much due diligence on them, and so they can get away with a lot more. Having said that, of course, regulation has dramatically increased since the last financial crisis, but the point still remains that if we are giving these bankers an unfair, I think, cuddly blanket around their products, which are effectively you lending money to a bank for them to then use that to make profit, if we're giving these bankers an advantage by giving them this protection, then of course they are going to, at some level, take advantage of it. The modern financial system is fundamentally designed to benefit those who already hold wealth. Here's how. Access to cheap credit. You see, the wealthy can access cheap loans to invest in real estate, in businesses and financial markets. These investments often appreciate in value, creating more wealth. For instance, billionaire investors use loans not only to expand businesses, but also take advantage of low interest rates. They then leverage that debt to grow their wealth even further so that their returns are far exceeding the cost of borrowing. And if you think about it, that money creation that happens and that is given into the hands of the bankers, where do they want to give that money? They want to give that into places where they are asset backed, and so that plays into the hands of those who actually have the assets, who are rich people. Which brings us very nicely onto the second point, and that is that wealthy individuals and corporations own the majority of productive assets, businesses, stocks, real estate that generate income and increase in value over time. For example, in the USA, the top 1% of households own more than 50% of all stock market wealth, while the bottom 50% own just 1%. Next, we have tax avoidance. Through complex tax loopholes and offshore accounts, the wealthy can avoid paying their fair share of taxes. In 2021, the International Consortium of Investigative Journalists revealed that billions of dollars in taxes were evaded by the world's richest individuals and corporations through offshore tax havens. In contrast, the poor are trapped in a cycle of debt that's harder and harder to escape. They often rely on high interest loans just to meet basic needs. Think of payday loans, which can carry interest rates of up to 400% or more. In 2020, the payday loan industry in the USA was worth $9 billion, with millions of low-income families relying on these predatory loans. And to give you a sense of that, the bridge finance market in the USA, which is a small section of the market which is used by property developers to develop properties, is worth 50 billion. So that productive market is actually not that much bigger than the payday loan market, which is rapacious and very, very predatory. Okay, let's talk about student debt. As of 2023, Americans owe around 1.7 trillion in student loans. Many graduates spend decades paying off their loans, limiting their ability to save, invest, or buy homes. In fact, a study from the Pew Research Center found that student debt disproportionately disproportionately affects low-income and minority students, contributing to wealth inequality across generations. Meanwhile, wages for the poor and middle class have stagnated, and according to the Economic Policy Institute, productivity in the USA has grown by 69% since 1979, but wages for the typical worker, unfortunately, have only grown by 11%. This disconnect between productivity and wages further exacerbates that inequality. So folks, if the current system is inherently flawed and deepens inequality, is there an alternative? Enter the Islamic Economic System. Rooted in divinely revealed ethical and social justice principles, Islamic economics offers a framework that aims to balance wealth, ensure fair transactions, and fosters community welfare. Let's dive into how it actually works and why it is just the solution the world actually needs. Islamic economics is built around several key principles that stand in stark contrast to Western finance. Here are the most important ones. The first and most critical principle is the prohibition of riba, or interest. In Islam, charging or paying interest is of course haram. Why? Because it creates an unfair advantage for the lender and often exploits the need of money for the debtor. Interest-based loans put an ever-increasing burden on the borrower, especially when you have compounding loans, which disproportionately harm the poor. Allah subhanahu wa ta'ala says in the Quran, يا أيها الذين آمنوا اتقوا الله وذروا ما بقي من الربا إن كنتم مؤمنين. O you who believe, fear Allah and give up what remains of your demand for usury if you are indeed believers. I.e., when you have lent out stuff, this is a prohibition that came in, then you shouldn't ask for that interest on top. Just get your principal back and call it quits. In an Islamic system, instead of interest, profit-sharing models are used instead. And this means that lenders and borrowers share both the risks and rewards of a business venture. For example, in a mudaraba agreement, the investor provides capital while the entrepreneur manages the business. If the venture succeeds, then both parties share the profits. If it fails, the investor bears the loss, which aligns incentives and prevents exploitation. This approach avoids the debt traps that we see in Western finance. Borrowers are not stuck repaying interest on loans that grow over time, and instead the financial success is shared and failure is borne by those who can afford it. The Islamic system also mandates zakat, an obligatory form of wealth redistribution. Every year, Muslims must give 2.5% of their wealth after expenses to those in need. The idea is to prevent wealth from accumulating in the hands of the few and to ensure the poor and disadvantaged are supported. In particular, the zakat goes after that stagnant wealth which isn't really being productive, and zakat wants to encourage people to actually put their money into the economy so that it's actually productive and useful for society. Allah subhanahu wa ta'ala says in the Quran, وَالَّذِينَ فِي أَمْوَالِهِمْ حَقٌّ مَعْلُومٌ لِلسَّائِلِ وَالْمَحْرُومِ. In their wealth, there is a known right for the poor and the needy. Zakat isn't just charity, it's a social responsibility. It creates a built-in mechanism for reducing inequality, ensuring that wealth circulates through society and prevents the kind of extreme poverty and inequality that we see in our current economies. Imagine if the wealthiest individuals in the world actually gave away 2.5% of their wealth annually. It could dramatically reduce global poverty. A study by the World Bank actually estimated that zakat could generate around 600 billion annually if fully implemented across the Muslim world, which is more than enough to meet the basic needs of the global poor everywhere. According to the World Bank's estimates, to lift everyone out of extreme poverty by 2030, the world would need to invest approximately $175 billion annually. Zakat literally solves the problem of global poverty if it is implemented correctly. Islamic finance also prohibits speculative behavior, or gharar, an investment into immoral or harmful industries which we know are haram. This means that no investment into zero-sum games or gambling is allowed, and no investments into businesses that harm society, such as alcohol or tobacco, is allowed either, which actually end up costing society as a whole as well. In contrast, Western financial markets, which form a huge portion of the market these days, thrive on this stuff, where you're trading in derivatives, high risk, very much zero zero-sum games where one person is going to be winning, the other person is going to be losing. These are the kind of things that then often lead to market bubbles, which eventually burst and wreak havoc on the broader economy. Islamic finance, by prohibiting these activities, seeks to create a functional society that prospers instead of funding degenerate and harmful activities that will risk real-world economic growth. Let's zoom in on what we mentioned around the risk sharing within the Islamic economic system. In a musharaka contract, for example, all parties involved will contribute into the capital, they'll share the risks and the reward. If the business works, great, everyone is happy. If the business loses, then everyone shares the loss proportionately. This system encourages ethical investments and reduces the likelihood of a financial crisis caused by excessive debt in the system. This system creates a much more level playing field, and the reason why it does that is because rather than automatically just defaulting to debt, and we're not really worried about the underlying activity of the business, because we're entering into partnerships, we really do care a lot more about what the business is actually doing, which means that we are going to be backing a lot more systematically those businesses that are more likely to succeed. And so instead of crippling people unnecessarily with debt, we are much more focused about our investment. Now you compare that with a current system where banks are quite happy to lend to you as long as you have some kind of asset like a property or something that gives them collateral, but they don't really care about what business it is that you're doing. But when you do that, and you do that at scale, all you do is you create a culture of recklessness, and you create a culture where the business itself isn't due diligence at all. And that ultimately ends up creating bubbles that people don't even see happening, and it creates incentives for the wrong kinds of behavior, and that can lead to things like the financial crisis that we saw in 2008. By focusing on profit sharing, ethical investments, and wealth redistribution, the Islamic economic system actually promotes a fairer and more just society. Here's how it addresses the problems we see in Western capitalism. Firstly, there isn't any exploitation through debt. Without interest, the burden of debt is drastically reduced. Borrowers are not trapped in a cycle of endlessly paying interest, and financial institutions are incentivized to invest in productive, real-world activities rather than speculative financial products. Secondly, wealth redistribution. With zakat and other forms of charity, wealth will naturally flow from the rich to the poor. This ultimately helps alleviate poverty and reduces inequality across society. Ethical investments is another key thing. Because we've prohibited investing into harmful and speculative practices, that means that the money is now going to be flowing much more towards socially beneficial activities as opposed to frivolous, useless activities like gambling industries or alcohol or tobacco companies. Finally, Islam places a very, very strong emphasis on community welfare. And so through mechanisms like awqaf, charitable endowments, wealth is used to build schools, hospitals, social infrastructure, and other things that benefit not just the rich, but also benefit all of society. So in conclusion, folks, the modern financial system is designed to help the wealthy stay wealthy, and unfortunately makes it very difficult for those who are trapped in the poverty cycle to break out of that. The Islamic economic system offers a real and viable alternative system that is based on justice, fairness, and ethical investment. And while we're not saying that in an Islamic system there will be no economic problems, and it's easy for us to get there, the point of this video is to show that with a radically different framework that prioritizes community welfare, ethical business practices, and a fairer distribution of wealth, we can actually create a much better looking world for everyone. I'd love to hear your thoughts. What do you think? Could some of the principles of Islamic economics genuinely be applied to our current system and actually work? I would love to hear your thoughts in the comments below. Please make sure that you do subscribe and like this video and hit the bell notification for more deep dives into economics, justice, and society. Until next time, Assalamu alaikum.